This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
This is the Victoria Real Estate Podcast. Hello and welcome to the Victoria Real Estate Podcast, where we discuss everything Victoria Real Estate. I'm Adrian Maclaren, and I'm joined by my co-host,
Vincent Baart. You said it last time. I don't know what to say anymore.
Yeah. We're still figuring it out on episode 50. We are realtors on the Citynest team. We are real estate agents at Remax Camosun Greater Victoria, and like always, on our monthly market update episodes, we're also joined by David Steinberg of Olympic Mortgage.
Hi guys.
David. Well,
yeah,
thanks
for having me.
No worries. And just before we get started, two things. I want to give a shout out to our sponsor of the podcast, Canine Car Care. Canine Car Care came to the office and cleaned my car while we recorded the podcast. They did an awesome job, and I was really impressed by the results. They offer remote car detailing inside and out. They offer 100% satisfaction guaranteed, and they state that a clean car equals instant confidence. And you can learn more about them at caninecarcare.com.
And they also have that subscription, which I think that's the future of most service businesses, but you can get a recurring appointment scheduled. So they schedule out cleaning for your car and take care of it. So it's always in a good state.
Yeah. It's
worth checking out.
Yeah. Guys, weekly stories. What's new? David, you said you had one in the bank.
I think I actually had two, but
Okay,
today it was just kind of funny actually. I was heading over here and I was kind of late because I changed my shoes twice and I changed my socks 3 times. Because
we're feeling confident.
I always want to impress you guys as much as I can.
This is an audio experience, right? Yeah. People are just listening.
Don't worry, the camera angle cuts off at the waist.
That's right.
Yeah. But now I'm wearing dress shoes or shoes that aren't sneakers for the first time in a long time.
Looking sharp.
And dress socks. So not that much of a story, I guess, really.
What was the first story?
The first story was actually I canceled the Globe and Mail.
What?
Yeah, I canceled it.
Oh my God.
Because I was unhappy with how they were reporting on some issues.
Oh, okay.
And so
showing some bias or
showing bias, but not just basically almost not enough opinion in the situation. More. Even though there's a very lengthy opinion section, but
right.
I don't know. I find that the Globe and Mail is a very left-leaning newspaper.
Yep.
And that's what I found in the last couple of years. And so I changed it. I subscribed to the National Post.
Okay.
And I got 2 of those papers.
Right.
And then the Globe and Mail just kept coming back.
Oh, okay.
And so that was my story originally. I thought that was so funny that I canceled the Globe and Mail specifically, ordered the Post, and just got the Post for 2 days and have been getting the Globe since. And I called the National Post and said, I ordered the National Post. I didn't order the Globe and Mail.
Yeah.
And they're 2 separate companies.
Right.
So there's really no real explanation as to why that could have happened. Unless it's the same delivery person for both companies.
Yeah.
And maybe they just think that I should be getting the Globe and Mail because I got it for so long.
I went straight to conspiracy theory. This guy's on the left coast. Of course that was a typo, right? He doesn't actually want the National Post.
Want the National Post.
Yeah. That's funny. So and have you been enjoying the National Post so far?
No, I haven't gotten it.
The 2 papers.
Oh, you still haven't gotten it? Oh.
Yeah. So I called them actually this last weekend. I called them and I'm like, I didn't order the Globe. I ordered the National Post. And she says, yeah, I can see that. And she says, but you're getting the Globe? And I'm like, yeah, I'm getting the Globe still. I don't know.
Wow, keep us apprised of that story.
Apprised of the situation.
All right, Vince, what do you got going on?
Wow. How do you top that?
Yeah, tough to do.
Yeah.
Pretty easily, I think.
Well, actually, this is kind of a fun story. So as the listeners know, we're licensed with Remax Camosun in Oak Bay. And our office, we've got about 30 agents that are licensed out of the Oak Bay office. About 6 of us got together and went to Willows Beach on Sunday. And we picked up garbage off the beach.
Oh, nice.
And there were more realtors than garbage. It is such a clean beach. But it was really nice. We got to set up a little tent, hand out free coffee. And, we took a really clean beach and we made it just a little bit cleaner. But it was really great to just be out in the community, kind of chit-chatting with other agents and chatting with members of the public who say, like, are you guys on community service? Were you the bad realtors?
Right.
We had to explain, no, like we're the good ones.
Yeah.
And
this out of the goodness of our own hearts.
that's right.
Not because we have to.
Exactly. So some skepticism. But yeah, it was a lovely time. I think if anyone enjoys going to the beach, there's some fantastic organizations that do beach cleanups, like the Surfrider Foundation. And it's a lot of fun because you're going to go to the beach anyways. You might as well make yourself useful and clean up some garbage.
Yeah. And last time we chatted about this, Vince, you were talking about maybe getting some scuba divers and putting them out on your boat and deep diving for garbage.
I know. It turned into like a 10X plan and then it went nowhere. We were going to get a group of free divers and none of the free divers were super excited to clean up garbage off the bottom of the ocean, which surprised me. And so I offered to drive.
So many goodies down there.
I know, yeah. I offered to drive a boat and help, but if there are no divers, then me driving around in a boat while other people are on the shore cleaning up cigarette butts is probably not a good look for me. So we canceled the whole thing and we just stuck to picking up garbage the old-fashioned way.
Yeah. Dang. Well, yeah, I was sad to miss that, actually. I was in Vancouver for the weekend. Went to a Whitecaps game on Friday. If anyone doesn't know, the Whitecaps are actually really good. Last year they went to the finals and they lost to Messi in the MLS finals. But
they played like Messi went against the whole team.
Yeah. Just
is that how sports work now? He's that good?
No. He's kind of in his retirement
He's with
phase.
LA, right?
He is with
LA?
Miami.
Miami.
Yeah, so he plays in Miami now. The team owned by David Beckham. So it's just a
I
full
thought
TV
Beckham
show.
was LA.
No. He owns Miami. Yeah. Anyway, so today, out of this weekend, they destroyed the team. It was great. That was awesome. Saturday, my wife went wedding dress shopping while I worked. And then on Sunday, I went and did the Sun Run in Vancouver. 10K race. And if anyone doesn't know about the Sun Run, it's 55,000 people running through the streets of downtown Vancouver, through the south part of the main part of Vancouver, and then back into the downtown area. And it is a gong show.
Sounds like it.
Yeah.
Nice.
There's just like the whole time. Basically, how I would help people envision it is it's just dodging people simulator for however long it takes you around 10 kilometers. So you're just running through left, shooting gaps. Saw one guy hit a pole.
Nice.
But it was good fun. Ran in 55. No, not the best, but
55 minutes. That's
55.
sub 1
That's
hour.
respectable.
Yeah, it was respectable. But yeah, that was my weekend, and now we're back.
You kind of glossed over the fact. So your wife, who was married,
Oh,
went
sorry.
wedding dress
I should have
shopping.
clarified. She went wedding shopping.
Is there a story there?
Wedding dress shopping with her sister.
There
who
we
was
go.
getting married.
There it
Yes,
is.
Yes, thank you, Vince. She's not remarrying. She's stuck with me. Before we get started into the nitty gritty of the podcast, I actually have a trivia question for you guys. You guys ready for maybe? I think you guys can get this one. This is time for redemption. I feel like you guys have had not the greatest track record with my trivia, but I kept it a little bit down in the easier section.
All right.
Okay.
Hit us.
Now you're just insulting us.
So if you don't get it,
Let's
then,
go.
Yeah. According to VREB framework, Victoria Real Estate Board, what range defines a balanced market by sales to active listings ratio?
C.
Okay?
Always guess C.
Okay. A, under 17%. Okay. B, 17 to 28%. And then C is 28 to 35%. And D is over 35%. And this is sales to active listings ratio. So how many sales have happened based off of how many active listings there are?
Within a time frame, right?
Within a month. Yeah. So
Okay.
and what counts as a balanced market? What percentage range?
I think it's maybe 28 to 35.
20 to 35?
C. Yeah, 28 to 35. It's so what that says is for every 3 listings, 1 is selling every month. So
Okay.
the average listing is taking 3 months to sell.
Okay. I'm so sorry.
Oh, come on.
Balanced market is actually 17 to 28%.
Oh, wow.
Okay.
Even lower.
Yep. Anything over 28 is considered a seller's market. And anything under 17% is considered a buyer's market. Yep.
Huh.
And
more
35%
you know.
was actually just to throw you off. So that's just
It worked. Hope you're
really
happy.
big seller's market. Now, follow-up question. What percentage was March, do you think? Where are we sitting? If 17 to 28 is balanced, over 28 is sellers, and below 17 is buyers. Where do you think we were in the month of March? closest gets a free coffee from Adrian.
I think it was a balanced market, probably.
Okay, but what percentage exactly?
20%.
20%. Vince.
21%.
Ooh, Vince with the sneaky overcut. And it does not pay off. It was actually at 17.8%. So we are teetering on the edge
Interesting.
of a buyer's market and a balanced market. But we are still in that balanced section in the month of March, but just barely. And I mean, obviously, this is the whole market, right? So obviously, the condo market is dragging that number closer to that buyer side because they are in a buyer's market.
Single-family dwellings are bringing the
multiples.
Exactly.
Okay.
Yeah.
Interesting.
Still multiple situations,
Sometimes.
multiple offer situations.
Yeah. I had a couple notified multiple offers over the weekend, but really depends on the property and pricing and everything.
Yeah, a million, 1.2.
And we'll get into that later in the podcast.
Sorry.
Don't worry. But before we do, David.
Yeah.
Let's just do this. Summary of the podcast today. We're going to keep it simple today. We're going to do an economic update. We're going to touch on mortgage percentages, what's going on in that side of things. And then we're going to do a market update. No fluff today, just hard hitting real estate facts.
No filler.
No fluff.
No filler, no fluff. All right, David, take it away.
Yeah, so I did attend a mortgage conference last week, and there was a speaker that talked about the economy. Normally, I don't really listen to the speakers at all, but I think I decided to at this one.
It was Brendan Ogvinson, right?
Yeah.
He is awesome.
Yeah.
I really like him.
I've seen him a couple times now, and he does keep things
It's fun.
Yeah, you can... He has funny slides
Yeah.
So his economic update was, the overall theme on this economic update was uncertainty. Obviously,
of course,
there's a lot of uncertainty with everything right now.
Yeah.
There's uncertainty with the political climate. There's uncertainty with our economic climate, tariffs, the wars.
The list
I
goes
guess
on and
actually
on.
there's a little bit less of a political uncertainty now with us having a liberal majority federally.
Yep.
But with regards to the economy, basically what he said is that the economy right now is fairly stagnant.
Yep.
Developers are not motivated to start new projects. And pre-sales are sitting. Condo units, especially I think in Vancouver, are sitting.
Yeah, Toronto too.
Toronto
The big
too, not
market.
necessarily here. But even we can't only just say that the economy is stagnant because the developers aren't busy, but BC did lose jobs.
Mm-hmm.
BC has been losing jobs, and especially youth unemployment is quite high at 15%.
Okay.
And I'm starting to read just random, I'm reading on Reddit, a lot of people are complaining that they just can't find jobs. So while I feel like there's sort of we haven't had any kind of deep recession, but I feel like we are in a recession right now based on all these sort of statistics that are happening. And just this morning, actually, inflation came in a tad lower than what they thought it was going to come in at. So right now, the economy is stagnant.
Mm-hmm.
Population growth is also stagnant.
Yep. And it will be probably until 2027 or?
Yeah, I mean, I guess the population went in the opposite direction, where we actually, I think there was a population decline, and I think we talked about this.
Right. Yeah. First time, I think, since the Second World War.
Yeah. And that generally for the economy, that could mean that there's not as much consumerism that's happening.
Yep.
Obviously, with less people in our country and less people coming in, there's less people buying things, and there's not as much consumerism happening. What else do I have here? So right now, there's also lots of headwinds on our economy.
Yep.
With the tariffs, and one of the overarching themes also of all the speakers we're talking about was too much red tape on almost all levels of government for developments to get done.
Mm-hmm.
So developers are just having there's so many obstacles now for building property. It seems like that they're just kind of throwing their hands up and saying maybe this just isn't worth it.
Yeah.
If there has to be this much time and this much red tape in order to get anything done.
Do you have any good news in there for us, David?
Well, the good news is that for people buying a property right now, I think it's a great time.
We did not pay him to say that, folks.
No, I'm
it's actually a good time.
Yeah, no, it's a great time because there's a lot of listings, I think.
Yeah.
Right now.
Yeah.
And there's a lot of uncertainty, which a lot of buyers a lot of buyers do shy back and say, oh, I'm just going to wait for the climate to be more stable before I do anything. And that leaves a big opportunity for buyers that still want to get in.
Well, there's two sides of this conversation I find interesting. One is like we have a housing crisis, and I find that when things are slowing, developers aren't building, et cetera, and I'm in the back of my mind, I'm thinking, okay, well, it's not going to be slow forever, and as soon as it's not slow, we're going to be in that exact same problem. We're going to have another rush, and prices and the housing market are going to go crazy because everything slowed to a halt. I don't really know how you fix that. How does the government stimulate or help developers during times when maybe they're struggling to make sense, have projects make sense due to, prices versus development costs, right? And, their current project's not selling. So, but yeah, if we're not building over these next couple of years, like I just foresee in the next 5 years that rush is going to hit, and we're going to be
it's going to go to the other side.
Exactly.
One of the suggestions from a couple of the speakers, including Brendan, was just scrap the GST on all new homes, and that's it, because they've only scrapped the GST for first-time home buyers. And I've actually talked to a couple of people that have owned homes previously, and they have to still pay the GST, and they're kind of crabby about it because those people would be motivated to buy a new home, except now they're like less motivated to buy the new home because they know they're paying 5% more than people who haven't owned homes before. So I think the government missed it when they announced just no GST for first-time home buyers. I think they missed it there. I think there just needs to be no GST on new homes for anybody, and I think that would really help things for developers, I think.
Yeah, definitely.
What do you think?
Agree. Yeah, I agree. But, Adrian, one thing that you said that I just disagree with in my core.
Please.
You mentioned it's the government's role to stimulate when things are slow. What these developers, what these economists, what these really intelligent non-realtor folks are saying is there's too much government involvement.
Right.
So just get out of the way. So I love David's idea of just like, hey, we're not trying to financially incentivize people. We're just getting out of the way. Make it easier for people to invest in real estate. We have this flight of capital that's happening from Canada right now. And if you wanted to invest, let's say you had $10,000 saved up and you wanted to invest in a BC startup, there's a program right now. If you're investing in a medical device startup or something like that, you get a huge tax credit when you file your taxes. So whether the investment goes anywhere, I'm going down a bit of a rabbit hole here, but if you create these financial incentives for investors to be working with developers rather than looking at it as risky, there's all these taxes and red tape, let the government get out of the way and let them provide some kind of financial incentive, like tax credit or something like that, so people are able to keep investing and supporting these developers. Because that's another huge issue is access to capital. You look around the city of Victoria, and I've talked about MLI Select to anyone who will listen, and I've been talking about it for a year. But right now, when you look at CMHC, all of the money that they're putting into these projects in downtown Victoria are all MLI Select programs for purpose-built rentals. So if you're a developer and you're trying to build market condos, even if they're subsidized like AHOP style condos, you have to pay full pop. You have to go and get really expensive money. And I think it's a 25-year amortization, maybe 20 years for those types of big loans. And if you're going with MLI Select through CMHC, you can get a 35-year, 50-year amortization. Yep. You have this artificially lowered interest rate. So the government is incentivizing, I think, the wrong thing. If we believe that owning homes and home ownership is one of the greatest achievements in our society, we either have to get out of the way and allow people to keep investing and doing that, or at least stop incentivizing people to become renters for their whole lives.
Yeah, I've always wondered that, actually. You brought up a good point. I've wondered why, there's so much incentive for purpose-built rentals.
It's MLI Select. Yeah.
Yeah, but I would just think that, for our economy as a whole, I think even owning property increases somebody's happiness. Honestly, I think I find that a lot of people, I've helped thousands over time go from renting to owning, and I can't tell you, 100% of those people are so happy that they made the change.
Yep.
We don't find a lot of people out there that are saying that I want to rent forever.
Yeah.
And so, I mean, I agree with you. I just don't really understand why the governments have been so, so gung ho about purpose-built rentals. They should be getting more. They should be incentivizing people to get into homes and own their home and own it for the long term.
Or just make it easier for builders to do what they want to do, which is build.
Right.
Builders aren't trying to do anything innovative. They are really just trying to build. That's what they do. And so, yeah, just to let the government kind of get out of the way, I think that's the dream. I guess I'm a libertarian at heart, and I just think less government is generally better, and let the market do what the market needs to do.
Yeah. All right. David, anything else for the economic update?
I could go through, there were a lot of slides here, obviously.
Yeah.
I think what he's expecting is, he said even just the announcement coming up on April 29th will give us maybe a little bit more direction as to where we think things are going. Mm-hmm. But for the short term, for the immediate short term, I think, first of all, mortgage rates. And I think
transition into mortgage rates.
Well, may as well. Should we? Or was that the next thing?
Oh, yeah, that is. Yeah.
So for the immediate short term, they don't really know what's happening with the war, of course, and the war is causing this oil supply shock, which to me, I'm not really understanding why there's such a big shock when it's just really 1/5 of the world's oil that goes through there.
Right.
If it was a half or 3/4 of the world's oil that flows through there, then I would think there'd be a true massive real oil shock, and I guess it would be much bigger than now.
Right.
But they're talking about this being about just 1/5 of the world's oil supply being choked, being like a massive world disaster. I hate to think what's going to happen when more of our world's oil supply gets constrained. But for the short term, I don't think rates are really moving anywhere.
Yeah.
Even though inflation now is down. Mm-hmm. Just this morning, actually, I was reading that inflation is just below the expectation of 2.5%, came in at 2.4%.
Yeah.
But with I think they call it the median, where they add, with inflation, they play with it so much. They add things in, they take things off. And obviously, when they added in the cost of oil, inflation was actually more like 3.6%.
Right.
And then when they...
Hang on, they're not putting the price of energy into the inflation calculation?
No, they are. It's I was reading it.
You got to remember, the price of energy kind of comes through every other thing.
Yeah,
right?
that's kind of my point.
But I mean, so then why include it twice?
Okay, all right, keep going, David.
So for the short term, because of this war, rates are probably going to be holding steady, I think.
Yeah,
but then in the shorter to medium term, I think if this war ends and if the strait opens up again and things just return to normal, I do think rates are going to come down.
Yeah. So and that's actually something that I find super interesting is like I think the predictions were before this war started that rates were going to come down. I remember that being your predictions as well. And looking at all the forecasts, I think I agree. And I feel like this war has been the sole thing propping up or balancing these interest rates. But what was kind of interesting is I remember when this war first started, there was all these hit pieces about, if this continues or if these things happen, interest rates could go flying up. And I remember I actually got a couple calls from clients that are on variable mortgages. And they were like, Adrian, should we lock in? And what the tricky thing is as soon as that happened, the war started, fixed interest rates jumped 0.5%.
Yeah.
Or something crazy.
Yeah.
Or more probably. Like they were mid-high 4%, I think was what they were quoting, what they could lock in at. And I was like, listen, guys, are you going to be that person that reacts?
Knee-jerk reaction.
That reacts to the news and that sudden jump and then locks in? Or are you going to take a step back, look at this optically and be like, once this ends, is it just going to be like a blip, And I was like, your variable rate is, say it's 3.99% right now or whatever. For it to even match what the fixed rate's doing, it's going to have to go up
way higher.
basis points, right?
Three
and
times.
I'm like, look at the how much interest rates changed over the even during COVID, or post COVID. And I was like, we had like a half or a 0.5% increase one time, I think, during that time. And obviously there was multiple increases. And so I just kind of put it into perspective, don't make any rash decisions, play cool. And then, if this is causing you to lose some sleep, maybe once this is done and interest rates or fixed interest rates kind of level out, lock in at that point and don't make any rash decisions, basically.
Yeah, and they'd be in good company because the majority of Canadians are that 5-year fixed.
Yeah.
That's where they live, right?
Yeah.
Because that's where it's comfortable.
Yeah, that's where people are comfortable. Exactly.
Yeah.
And I do think that our economy is in a recession. I do think that I do feel like we're in a little bit of a recession. People are spending less money. Mm-hmm. People are being more concerned about their finances, and when that happens, people pull back.
Yeah.
And we've already seen it, I think, with the real estate market. I guess people have pulled back.
Definitely,
right?
yeah.
And there's more people out there unemployed. There's more people looking for jobs. So even though there's no indications of this in the stock market, I think that the underlying numbers are I just think that we're in a recession, which means that I think rates are still going to come down.
Yep.
And I think in the short to medium term, we're probably going to see also fixed rates come down. Variable rate, maybe not as much, but the fixed rates will come back down.
Yep.
And then after a sustained period of lower rate, maybe a year and a half, that's when the rate will start going back up again.
Yeah. That makes sense. So right now, David, what are interest rates kind of sitting at? Like, what are you seeing for a 5-year fixed versus like a variable?
So for a 5-year, and it really depends. It's very dependent on the type of deal that you're doing.
Yeah.
So if it's high ratio insured,
give me the number.
High ratio insured, we're seeing as low as 3.89.
Really?
Somewhere in that range. 3.89, 3.99.
With everything that's going on with the war and everything. Yeah.
I mean, before I feel like the high ratio insureds actually didn't seem to move as much as the uninsured dollars.
Right.
So in uninsured, we're looking at anywhere at, from 4.3 to 4.7 on a 5-year fixed. Whereas with the variable, high ratio insured would be prime minus 85, maybe prime minus 80. And on the uninsured side, maybe prime minus 40.
Yeah.
Maybe somewhere around there.
Just to just to show people why you should talk to David, I just pulled up TD's listed rates, and they have their.
You're going to call them out, eh?
Oh, I'm going to
just
call
like
them
that.
out. Yeah. I was actually ranting to somebody about this, and I was like, why is it that like big banks, TD, Scotia, what they have listed on their website, and these are like government-backed banks, and it feels like you're haggling with a market person like over a rug in like Egypt.
It is.
You know what I mean?
Yeah.
And I'm like, so on their website,
they don't give you the best rate.
No,
right
they
away.
don't. And a 5-year fixed closed high ratio, so what David just kind of talked about, they have their listed rate at 4.94. That is over a full percentage what David just quoted. So
wow.
So you got a TD calls you like, yeah, we got you pre-approved at 4.94, and you're like, that sounds a little high, and you got to play hard to get. Oh, I might go talk to the stall next door, and you got to get them out to fight with each other, and it really feels like the Wild West. And that is one thing that I find very, very crazy, that this is not just standardized. Everyone's offered the same thing. You almost got to play like this haggling back and forth.
Yeah, I mean, like with regards to 5 big banks posted rates, they're always out to lunch.
Out to lunch.
They are always out to
Oh
lunch.
my
They're never
God.
going to advertise their super low rates or whatever they're actually giving people mortgages at.
But wouldn't that be better if they artificially, if they said, hey, we'll give it to you for $2.99, conditions and terms apply, and then they hit you with the 4.3? Like, wouldn't that make more sense? They're like advertising that they're not competitive.
Yeah.
Well, that's kind of what like the online discounters are doing.
Yeah.
Because we got the banks on the one side of things that have their posted rates massively high.
Yeah.
And then we have these online brokerages or online discount lenders that are advertising massively low rates that are just, I mean, I'm going to call that out, bait and switch rates.
Yeah.
They're bait and switch.
And I feel like this might change coming into the future, because I feel like in today's, like, I don't know what it would call, like what you'd call it, but like in today's day, people appreciate transparency, because like there's so much misunderstanding and misinformation that if you actually just are transparent in today's age, it's like very refreshing. So I think that there's something to say there, but yeah.
Yeah, but there's right now there's too many people being transparent, and and I mean right now you just with rates right now, it's almost like you don't necessarily believe it until it's on paper in front of you.
Yeah, 100%. Yeah. So 5-year fixed closed at, you said 3.89. David, what about variable? What are you seeing?
Yeah,
variable
so
now?
prime minus, like for the high ratio insureds, probably prime minus 80, prime minus 85, which would be 3.6 to 3.65.
Okay.
And then for the uninsured deals,
Yeah.
probably prime minus 40
Okay.
or prime minus 50.
And what is that at, I guess?
So that would be like 3.95 to 4.45.
Okay.
Yeah.
That's not bad.
So still significantly lower than fixed rates.
Yeah.
Yeah.
Okay. Well, I think that wraps up our long-winded mortgage section.
That was-
a couple big
that was
rants
long-winded.
in there.
Oh,
no, not
come
you,
on.
David. I went off there. You know, we got to stay focused here.
So what's happening? April market update. Where are we at, Adrian?
Let me kind of set the playing field here. So buyer's market conditions continued. I would say like I said, we're kind of on that right in between a buyer's market and that balance section. So from February with little change, market remains relatively weak. Sales stuck in like a post rate hike trough. Similar to 2013, 2014 levels, very similar market. Single family sales ticked up slightly, but nothing crazy. Well located, move-in ready homes under $2 million are still selling well, often above assessed value. And that's something we've continued to see over the last year, is that really nice product, well-priced single family is that most competitive market still. And then where we're seeing the market struggle is lower end, poorly located or dated homes that need a lot of work are sitting much longer with an average days on market of 50 days. And that's surprised. I actually had a CMA like sit down with the seller this last week, and I said, hey, just so you know, like average days on market for this product right now is around 2 months. And they were like, what? We've never took longer than 7 days to sell our home. and they've sold, 3 or 4 times in their lifetime. So that was a bit of an eye opener for them. So
The market has cycles, and
Yes.
I think people forget that. We expect it's just this kind of slow and steady ramp. And if you zoom out over 60 years and you kind of, don't wear your reading glasses, it does look like a steady ramp. But if you zoom in and you look at the 1 or 2 year periods, there can be times where you're absolutely down. It takes way longer to sell, and it's way more difficult.
Yep.
So let's talk about sales activity. So what actually sold in March of 2026? There were 579 properties sold. Who cares? What difference does that make? Is that a lot? I don't know. It's down about 5.5% from last year. So when we look at March of last year versus March of this year, the sales volume, so the number of homes sold, is down 5.5%. But it's up 24% from
February was slow. That was a slow.
February was a very slow month. And yet it was one of, at least for us as the team at Citynest, we had one of the best quarters we've ever had.
That's true.
So if you ask 100 different realtors how the market is doing, based
will
on their
give you
own
a different
anecdotal,
answer.
it's
Yeah.
all different. Everyone's all over the place.
It's all different.
Yeah.
It's completely cyclical. I had an amazing February,
Yeah.
and my March was, I think, slower.
Yeah.
So it just
So it's very anecdotal.
doesn't make sense. But what does make sense is single family home sales were down 2.4%. Well, actually, that doesn't make sense. So the number of single family home sales, 285 sales for the month of March, were down 2.4% over March of last year. Yeah. So we're seeing prices steady for single family. We're seeing multiple offers, and yet we're seeing the number of sales is down.
Well, what I remember what I said there, Vince. I think it's like I said, it's that well priced,
That's it.
located, right? And there is single family product that is sitting. And it is just that less desirable stuff.
Yeah. So the stuff with a smelly basement, the stuff that needs a little bit of a cosmetic overhaul,
and unless they're pricing it extremely competitively,
Right.
which a lot of the time they are not.
And I think because there's more choice.
Yeah.
Oh,
exactly.
absolutely. Yeah. So on the topic of inventory, we have over 3,200 active listings as of the end of March, which is crazy. It's up almost 8% from the same time last year, and it's up 12% from the month before. So that's normal. We do have a spring market that does warm up in March, April, May. So we are going to see more listings now than we did, say, in February. But to keep in mind that 3,200 active listings, that's an awful lot of listings, considering at one point we had down around 1,000 active listings when the market was really crazy. So context, I say this every single month, context is so important when you're looking at these numbers.
Yeah.
When we look at 3,261 active listings at the end of March, there's a lot to choose from.
Yep.
And so just be aware, the stuff that you're looking for today, if you're a buyer out there, the right listing, the right home for you is just around the corner. There will be lots of listings coming up. So how is inventory going, Adrian?
Well, one thing I quickly wanted to touch on is you did say we're down 5.5% in terms of property sold. And we talked about single family homes down 2.4%, but condo sales were actually down 18.8%.
I tried to gloss over that. Yeah, it's pretty bad.
So that 5.5% average, you can see that most of it is coming from the condo sales at 18.8% down in terms of sales versus the single family market only down that 2.4%. So that averages to that 5.5.
And to be clear, that's not pricing. That's the number of sales.
Yeah.
So it takes longer for these properties to sell. That doesn't mean that prices are down 18%.
Yeah.
But it just means if you're a condo seller, you have to manage expectations.
Yeah. And then so kind of touching on what Vince just went over is new listings remain high. And many of them are actually relisted properties that haven't sold. And we're seeing that same property relist over and over every 3-month cycle as they do with different price jumps potentially. Total inventory is now high at its highest level in about 11 years. And we're still below that 2014 peak, but getting close. Key historical note. So this is actually very, very interesting. When new listings dropped in 2012, 2013, which they just have started to do. So new listings have started to slow.
And so just for context,
yeah.
when you say new listings starting to slow, that's people are saying, I'm not even going to try to sell in this market. I'm just going to sit and wait it out.
I think it was the new listings number in February was higher than March, if that makes sense.
Got it.
We had more new listings in February than we did in March. So, and when that happened back in 2012, 2013, that marked the market bottom. So if history repeats itself, the market bottom might have just passed us.
Did we just miss the bottom of the market?
Hey guys, this is going to come out in the next week or so. It's too late.
It's too late. Yeah.
No.
You missed it. You missed the bottom.
It's not too late. And the thing is like when you think of a bottom, you think of this trough that goes down and then it spikes back up. And that's not what is going to happen in this market. And we can kind of get into that into our predictions. But Vince, benchmark prices.
Yeah, let's get there. Benchmark prices for single family homes in the Victoria Core. Now, surprisingly, I learned this when I got licensed. The Core includes View Royal. I don't think it should, but it does. Pricing is down 1.1% year over year. So we're down to 1.33 million, which is still crazy.
Very high still.
Very high. And it's up from 1.307 in February. So there's normally a seasonal adjustment that happens. The market does heat up in the spring. And so actually prices do come up a little bit. Condo prices. Wah, wah. Do we have that sound effect?
We
don't
do.
have. We'll get there. Womp womp.
Womp womp. Right there.
Oh, that was way longer than I thought.
Yeah,
okay.
yeah.
So condos in the Victoria Core are down. So the sale price, average sale price is down 0.8% year over year, but it's up from 545,000.
So very similar for single family.
There's hope.
Yeah. So yeah, in terms of prices, little change in March, small decreases in median prices across all property types, detached, townhome, and condo. Yeah.
So you just have to really keep in mind, this is a typical spring pattern. Sales and listings both going up and into the May/June peak. So we're going to keep seeing activity come on. And that's why I keep telling people the right listing is just around the corner. If you're thinking of selling, get it on the market before summer. I've had a lot of conversations with sellers that are saying, well, wouldn't it make sense to list in the summer when, the weather's really nice? No, people, when they're out in the summer, they're out camping, they're adventuring. Not a lot of deals get done in August.
They have kids
exactly
with them.
They have places to be.
They're busy.
So you want to get your property listed before school's out for the summer, if you can help it at all. And then the other condition.
And one thing I will touch on, Vince, with that is I would say now rather than later, because I'm seeing like my buyers that are like they've been hounding the market, waiting for that perfect home to pop up in that little micro area that they're looking in, and there hasn't been too much good product showing up. And before that listing boom comes in the spring, when there's lots of choice, if you're that first one that pops in the market, that's usually the ones that are like jumped on.
First mover advantage.
Yeah,
yep,
exactly.
Absolutely. So we've got good supply, we've got moderate demand. So that means that there's less pressure on both sides and there's time for due diligence. Unless you're a single family detached around that $1 million mark, then forget what I just said. Yeah. But if you're, outside of that category, there's definitely time to be doing due diligence. But one thing that's really important to note, and our illustrious board chair at the Victoria Real Estate Board, is reminding listeners that we have a lot of micro markets in Victoria. So what's going on over in Cadboro is not the same as what's going on in Cordova. So having a local realtor in your corner that knows those markets and is able to kind of give you the right advice, it's really, really important.
Yeah. Do you know somebody, Vince?
I know a few good ones.
Yeah, okay. And a couple of wild cards to watch. So obviously we talked about it in our economic update, but mortgage rates have crept up. So how long do they stay there? Does that end up affecting us at some point in terms of affordability? If they end up staying there for longer and this war kind of continues on into a longer term thing than expected. Fuel prices threaten to reignite inflation. We've kind of talked about that as well. If the global conflict drags on, the Bank of Canada may be forced to raise rates. Even so, I think what is that website that you can bet on anything?
Polymarket?
So Polymarket actually has a bet that you can do. Will Canada raise interest rates in 2026? And what would you expect? I can't remember what the exact number was, but they have the percentage at, I think, 70% no increase right now on Polymarket. And you would think, like, with everything going on and everyone calling me being like, should I lock in interest rates? It's going to go to the moon. Polymarket has it at 70%. So it's like, there's all these headlines that are like, scary and everything. But at the same time, we need to like take a step back, like I said, and just, breathe.
I wonder if investing in Polymarket side bets is an alternative to real estate investing.
Well, one thing I think that's like actually a really nice tool with Polymarket is, say you're like, oh, what, like this really bad thing that might happen. What is like the overall betting odds on it happening?
Bingo.
And you can go check and be like,
Yeah.
okay, like this is, and it kind of gives you an idea of like, obviously betting odds aren't 100%.
Yeah, but people put their money where their mouth is.
Yeah.
And I think if I was a pollster, I would be really worried about my long-term job prospects because the pollsters for so many things are way out to lunch.
Yeah.
But Polymarket seems to be doing a pretty good job of predicting where things are going just based on consumer sentiment.
Yeah. And then like David said, another wild card, consumer confidence. And it's been depressed since the rate hikes and elevated costs are not helping. So prediction summary, I'm gonna give mine. My bottom line is I don't expect a market turnaround anytime soon. We may have hit that bottom, but just because we hit a bottom doesn't mean it's going to skyrocket right now. It might be a slow, gradual, flat line / slow increase over the next couple years. I think my prediction is we don't have another bull run until late in 2027 is my at the earliest, right? So advice to buyers, stop waiting for the absolute bottom because, like I said, it might have already passed. There's good selection and negotiating power right now, especially for entry-level homes, right? Like that renovated nice area stuff, that stuff's selling competitively right now, but a fixer-upper in Colwood, not so much, right? So there are opportunities out there right now and will be for, I would say my guess, and this isn't a guarantee over the next year and a half, but yeah, sooner rather than later.
Good stuff.
Yeah.
Where do we go from here?
Do you guys have any predictions on the market? Do you guys agree, disagree?
No, I agree. I agree with you. And the thing that everybody has to remember is that when you're buying a house, you're not buying a commodity that's the same as everybody else.
Exactly.
You're not buying a gold or silver or wheat or corn or whatever it is, where it's priced, where there really is a bottom.
Yeah.
You're buying just one out of many, 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 and you could get, like you were talking about last podcast or a few podcasts ago, about getting your clients a great deal. Mm-hmm. Every deal is going to be different. And that's what buyers have to remember, is that there is no bottom to wait for when you're in real estate because you have to find that property.
Yeah, that's a great point.
Yeah.
Vince, what about you?
Oh gosh, what's that saying?
Oh no.
Don't wait to buy real estate, buy real estate and wait. So if you're going to be alive for more than 5 years, that's it. Yeah. I mean, I've been saying this for years. Like, stop trying to find the absolute bottom. If you need an extra bedroom because your family's growing, like that's kind of a bigger priority than nailing the perfect interest rate, in my humble opinion.
Yeah.
Definitely. All right, guys. Well, I think that wraps it up. Thank you for listening to Victoria Real Estate Podcast produced by the Citynest team. We have had some fantastic reviews and we love them. So please leave us a review on Spotify, Apple Music, or wherever you're listening. We also really appreciate you guys sharing the podcast with friends and family. Otherwise, Vince, how people get in touch?
Send me a LinkedIn message, especially if you're one of that 15% of youth unemployed. If you're looking for work, I've got work. Like, send me a message on LinkedIn. Let's talk. Let's put this city back to work.
And David, how can people get in touch?
Just email me, David@olympicmortgages.ca.
Awesome. And you can reach out to me, Adrian, at 250-464-4122 or on Instagram at Adrian Real Estate Victoria. Thanks, guys.
Thank you.